All right, what's up, tycoons? What's up, traders? Super excited for today's video. Coming at you guys with a viewer request. We're going to take a look at YFII, DeFi money, and then we're also going to look at Yearn Finance YFI. So if you want to see just Yearn Finance, all you have to do is skip forward to the second half of the video. But with that being said, I do these viewer requests every week. So if you want to see your tokens in a video next week, all you've got to do is comment down below and I'll get to them as soon as I can. We're going to go over the demand zone here on YFII, our bullish price targets, and why we're bearish below these resistance levels, okay? There's a methodology behind all of this. We're also going to take a look at the relative strength index and go over these things, combine them all together so that way we can help understand the price action and get an edge in the market. Trading is like going to battle, going to war. You need to have an edge. You need to have the proper weapons and know how to use those weapons so that way you can increase your odds of success on the battlefield. So make sure to smash the like button, subscribe to the channel, and we'll get straight into it. So the reason we're bearish below these three levels, these are the 38.2, the 50%, and the 61.8% retracement levels. These are the three most common and well-respected retracement levels. So we've taken our swing high, connected it to our swing low. We've had this move down, and then we've retraced. We've started consolidating. Okay, but all of this is still healthy retracement territory, right? Because nothing moves in a straight line up or a straight line down. Rather, you get a move up, retracement, continuation of the trend, or move down, retracement, continuation of the trend. That's how you spot some trend continuation in the markets. Now, if you move down, retrace, consolidate, and then break through those retracement levels, that's how you can spot a potential upside reversal. So we have done that, and we've started to consolidate. Okay, but we have not broken past our 61.8% level of 1617. If we can break out, flip that to support from resistance, then we can come up and potentially hit our bullish price target of 1718 as well as 1866. But everything below here, okay, which our 38.2% level is going to be 1413. Everything below there, we're going to be bearish below there, and there's a chance we could come back and test our previous demand zone around 1000, or some of our previous lows right around 1200. Now, the way a demand zone works is that this is simply, a little bit better area of support than just using one solid support line. What it is, it's an area where there's an imbalance of buy orders that end up pushing the price higher. So as you see here, we consolidate, and then that imbalance of orders really pushes the price up higher. Then we come back down into this area of imbalance and we push the price up higher. And then we come back down. Right, and we keep pushing up higher each time we test that imbalance zone. Now we are in a slight uptrend. Okay, we started to make highs, higher highs, higher highs. We're making lows, higher lows, higher lows, higher lows. So we do have the potential to continue heading upwards. And as I mentioned, we are consolidating around our major retracement levels, but ultimately we need to really break out past 1617 to hit new highs, right, and to potentially get a reversal and hit our bullish price targets to the upside. If you look at the RSI, we had a term known as bearish divergence. And what we wanted to see a breakout from this trend line. Now, what bearish divergence is we had a high here, then we had a higher high here. So clearly the token's in an uptrend, it's going higher in price, but we had a high and then a lower high. So the relative strength index was losing relative strength. Remember, your RSI is going to measure the relative strength of a token at its given price. So generally, if the token's going up, the RSI should be going up as well. But sometimes there's divergences, in this case, a bearish divergence. And I said, hey, if you want to be bullish on this, then all you need to do is see a breakout. Now, we did end up getting the breakout, okay? So, we broke that bearish divergence trend line, but what we wanted to do was flip this to support, okay? And, stay ultimately above this trend line. Even if we just were moving sideways, staying above it, we actually cracked down below it. So, remember, we're bearish below 1413, and then we're also, have this bearish divergence where we're starting to appear to have a look above and fail. Now, simply what that means is that buyers had the opportunity and they looked above and they were presented the opportunity to stay above in this range and ultimately push price higher and flip our resistance to support. But we haven't been able to flip 1413 to support at all. Each time we've come up above it, we've actually gone down below it, and we haven't had any candles closing above that 1413 level. So, when it comes to YFII, things do look a little bit more bearish, but Yearn or DeFi money really tends to pump just out of nowhere. So, we could end up, just smashing right through these resistance levels at any time. What I would do is I would set some alerts. So that way, if we test some of these levels, you don't miss out on any of the price action. Now we're going to hop on over to Yearn Finance now and take a look at Yearn Finance. Let's see what we've got here. All right, so Yearn Finance actually did hit our bullish price targets up here. We hit the first bullish price target actually at 96.70. So that was nice to see. And we initially had this cup and handle breakout that we were looking for. Now we had some good signals on the MACD as well as the RSI. Remember, when we were just looking at DeFi money and YFII, we saw that it broke out and then it already started trading below. So, just like the last one, we had a bearish divergence where we were creating higher highs, but then lower highs on the RSI. We were able to break out above there and stay above. So Yearn Finance is looking a little bit more bullish at the moment. If you can see, we're right here at our 61.8% resistance level of 89.58. We've been able to break past the 38.2 and the 50%. So if we pull back, we really want to stay above 82.04 and 74.50. All right, those are going to be the levels that we want to flip from resistance to support to continue pushing higher and potentially hit our next bullish price target up here at 10,931. And so not only did we get that signal here where we got the breakout and it's still trading up above, so that's a good sign, but we also got a nice entry signal on the MACD right here as well. So, we came over and we got a nice push to the upside after the entry signal, which that's going to be the red line crossing above the blue line here. That happened right around this area. And then we got a strong push up of about 2,000 points on Yearn Finance. Now, it also works for exit signals as well. So when you see it curl down below the blue line, you can see we ended up getting a sharp pullback, right? And then over here, the red line crosses below the blue line, and we ended up getting a pretty sharp pullback. Okay, so keep that in mind. If you're bullish on this, you want to see this red line stay above the blue line. If it crosses below, there is the potential that we could see a sharp pullback. Now, that's not always guaranteed. If you take a look here, we got a crossover below, right? And we really didn't move much lower, moved about 500, 750 points, which, is still a little bit of a pullback, but it's not super strong. Now, one thing we did do that was very good to see was we held our major retracement levels of support. So we had the resistance up above. And once we got this breakout here, I said, hey, if things do end up pulling back, okay, we need to hold above 65.49, 61.91, and 69.07. Those are going to be the three major support levels. Just as I mentioned before, 2023, a lot of crypto has been rallying, whether it's altcoins or Bitcoins itself. And so we did have an uptrend, right? We're making highs, or we're making lows, higher lows, right? Higher high, higher high, higher high, higher high. So, if we wanted to continue that uptrend, all we had to do was hold above our levels. We bounced right off of the 65, 49, 50% retracement level, and we did exactly what we wanted. And we came up and got our move up here to 96.70. So, we came up, retraced, continued the trend versus coming up, retracing, and breaking through those levels and getting a trend reversal. So, ultimately, we're in a larger downtrend, right? If we zoom over here a little bit, we can see that, we're definitely in a larger downtrend. We're retracing. We're almost breaking through our major retracement levels. We did it before. We just haven't really been able to close above and stay above those levels. So that's the main thing we want to do is, after this move down, we're starting to consolidate, break out. We want to retest this 89.58 as support and push up higher. And once we get past 10,931, if we get past there, then we'll go ahead and come up with some new bullish price targets to the upside. So that way you guys are prepared and can understand some of the price action some more. Appreciate y'all watching the video. Hopefully you enjoyed it. If you did, smash that like button, subscribe to the channel, and I'm out.